and good evening. This is Michael Filigera, and I am with logicalsignals.com. And this is the Elliott Wave update for the NQ from Monday, March 22nd, 2021. A very interesting day. Depending on how you traded it, it could have been a very difficult day. We had left it off last evening that the market basically had come down and traded at some early lows. And then by the time we had gotten done doing the update, it had really begun to rally. And it appeared that it might have completed an ABC rally up. But by the time we kind of got in towards our opening today, the market had continued to advance, pulled back, and then started to rally again. And at our opening, we saw a little bit of downside and then just breakneck buying. It actually wasn't breakneck speed, but it was very, very consistent for 4 hours. Consistent buying. Had very minuscule to small, very small pullbacks, and just push, buying of stock, buying, of course, of the index as the index price goes through the roof. When it did eventually stop, it did turn around, it did come back down and started to sell off right through to the close, which is always very interesting. That just to me, the way it trades in terms of we get tons of upside volatility, they I don't know if they knew if they had these sell orders coming, or if the sellers were just totally absent all day long, or if they actually paired anybody off, buyer versus seller. But it never really feels that way. Sometimes it's the way these things hit the market. Today, though, was a definitive buying spree early on. Now, we had given the alternate count yesterday. In fact, that's what we spent time talking about. And that basically stated that instead of this being the completion point for the intermediate wave B, this was wave A, a minor wave A. And this we had put as minor wave B. So under the alternate count, this would be that we are starting a C wave up to complete this intermediate B wave. And these are the Fibonacci's. Now here it got above 382. And in fact, we had discussed that it likely would shift a little bit heavier towards the alternate count on a solid break above 13,100. Well, getting up to 13,157, it's a solid break of 13,100. I would say you're halfway to 13,200. But it held up there and it held up there and it held up there for a while. But then during that last hour, it was, oh, here come the sellers we want out. And they pushed it back below 13,100 and then some before we got the close. We need to leave this alternate count in place right now. But as it stands here, this is our preferred count. So, but let me go back and finish the discussion on the alternate. If the alternate count is indeed in force, then the expectation would be that it's going to 1, 2, 3, 4, at least have one more wave, if not several, and that the one more wave to finish the first wave of C, wave 1 of C, then another pullback, and then it should rally. But we definitely should be breaking up to at least 618. That to me would be the minimum. And the reality is that we can go much higher and likely get up to new highs for this particular sequence at 13,764. Around there, 765. That would be, that's the most common relationship between this would be a C wave. It is related to the A wave. And that's where it would be equal to 100%. It would be up here at 13,765. Right now, we're way down here in the bottom third of this particular rally. Now, back to the preferred count. So first thing I got to do is I've got to take off those. So I put it back, and that this completed our B wave, and that this was minor wave 1 of 3, which would suggest this is minor wave 2 of 3, and it's going to come in an ABC. I've left the labeling out for now. In fact, I can bring this down to 30-minute. We can see a little bit cleaner inside there. We can say A or 1, 2, 1, 2. Now, see, it gets a little funky right in there. But we have to count it. We have to allow it. So 1, 2, 3, 4, 5, 1, 2. So that would be 1, 2, 1, 2, 3, 4, 5, 3, 4. So we could, because I'd have to break these down even further to see all the little divots inside those. So even on the 15-minute, we do have a few pullbacks in there. So let me open this up. Let's take a peek at 1, 2. Then we get a 1, 2, 3, 4, 5. We could say this is 1, 2, 3, 4. No, I'm going to have to put the 1, 1, 2, and then it subdivides. 1, 2, 3, 4, 5 of 3. Although that could be 5, completing 3. We are able to put a completion there in terms that could be the finishing point for wave 2. If it isn't, this needs to hold. And it kind of has, and it kind of hasn't. But it really needs to be left as an ABC and not turn into a 5-wave structure down. Because then it just presents a different picture, even on a 15-minute basis. So, because initially I'm thinking that it looks like it needs an additional rally coming up, and we can, okay, don't need that one. I need to put this back. Come on, those. And let's go, yes. There, to there. And we can get our Fibonacci numbers for where this should complete. Now, it really has drifted above the 70% retracement, and likely it's going to be reaching up towards higher levels than I would want. We should have some more resistance up at 65, more resistance at 228, but we're trying to balance this within the preferred count, and it should be complete. And then my expectations would be that this would turn into a 5-wave structure down. Put the pin in that a little bit stronger. I'm leaving it open right now because it is a little bit more difficult to count. So I need to let it play out a little bit more. But if indeed that completed it, then we're going to look at these numbers to begin to tell us where we're going to be dropping off to. And I'll show you how we can throw some Fibonacci's on there. We're going to go back over, and we're going to use the retracements. And now we want to run the retracement from here to here. Oops, coming up to here. Come on, give me back my, there you go. So now we can see that we have the Fibonacci levels coming off. And being that if this completed minor wave 2, we're beginning to drop in that illustrious wave 3. And again, within a 5-wave structure, wave 3 is always, or quite often, the longest wave and the strongest wave. It's where we begin to see some recognition for the downside, something else kicks it in and just kind of shows that upside is done. And we start to trail off. But this would be a minimum where we might see it finish this initial 5 coming down and then get a rally. So remember, as you're counting, if you can literally count 5, you're going to get a rally, and you're going to get a bounce off of that. And that should then form, again, we're on an hourly. So if you do it on an hourly chart, it takes a while for this boat to turn around, but it shouldn't stop sinking and start rising on a more consistent basis in terms of putting in that corrective bounce, which should come in the form of an A, a B, and a C to the upside. Once that's complete, then we begin to drop again. So we'd be looking for a drop below this level. We'd be looking for a drop below this support line. But then in between, look at all the support we have right now from our moving averages. Here's the 20, here's the 50, here's the 200. We're beginning to bunch up. And so not to be unexpected, but, you know, kind of had a great buy and then they started to sell. We got to put everybody in applause. But we'd be watching for these moving averages to also be put into play, and they will be put into play. These are trigger points for many algorithms that are timed, and they're timed against when the market may drop to a certain level or rise to a certain level. It can be a trigger to set off a program, you know, whether a buy or a sell program. So what we have for tomorrow is the possibility, if this is complete, then we're going to be looking for it to go down, likely hold this very first level. Doesn't have to, certainly can pick up the steam, and it might just change the overall initial count of that first 5 waves down. But we're going to be looking for it to find some support somewhere in here and to finish this initial structure, do an ABC rally, and definitely that we can see ABC, and then to continue to decline. Upside would come in if somehow overnight that this continues to rally higher, much higher than where it is right now, and it begins to break above this top level. Then we're into the other set of numbers that we had, which showed the upside. And I would dare to say that, remember that we have that resistance that actually goes all the way up to 13,400 or 500, somewhere up in there. The all-time high is 13,900.50. So it has a lot of room before it would reach that level. And again, this would be a B wave. Up is what we would be looking for. So, and this so far is where we feel that this is the A coming down. So this is the finish of the larger A. This is A of B. This would be B of B. Yeah. Get myself confused on that one. Let me go back up to my hourly chart. There you go. If I took this B away and I just put it as an A, this is A of B. Oh, excuse me. Yeah, B of B. Yeah. And we would expect this B wave rally to continue. And this is the C wave up, excuse me. So this is A of B, this is B of B, and now we're in the C of B rally. And we have, let me undo those and now do some additional extensions that showed that. I'm going to put it at the bottom of this wave here up to that high. down to that low. And you can see that we have 13,439, 13,526, 100% at 13,756 at 57. And that would be a C wave up. So if we continue to get that intense buying, I'd be looking for it to break 50%. 618 would be its first possible completion point. And as we discussed, this is a C wave. Its relationship is to the A wave. The first and strongest relationship is that the C is going to be equal in length to A, and that puts it up here. The second is that the C wave will be 6.618 of the A wave, and that puts it up here. Still to a high above what we would consider the A, giving it the strength to be complete at that level, and we can still label it C. If and when this completes, and it is the alternate count, what we would then be looking for is a 5-wave intermediate level C wave down to complete this primary wave A off of that 13,900.50. So I know it starts to get excited, get confusing, let me rephrase, but it truly is worth allowing the market to tell you what it's doing, to trade what is in front of you, to know where your points are, that you're going to switch your position. So in other words, it's like in this time when the market was moving up, and I'm going to speak from my own experience, I underestimated the power of the buyers. So I participated when it first started to go up, but I'm looking for this level to hold it. And basically, so I started to short it about, I think, 75. And then by 91, I had built into what I liked as my position, but then it decided to go through it and it went above 13,100. So I had to get out. That was my, as I said last night, that was my break point. But I'd had enough where it was like, oh, gee, that was, you know, a whole lot more than I didn't need to take. Recoverable, absolutely, not a problem. But unnecessary. So continue to trade what's in front of you and realize, see, this is one thing that I kind of got stuck at that moment. I'm watching my Fibonacci and my indicators. I really lost track that the moving averages on the 30-minute, on the 15-minute, on the 5-minute, on the 2 and on the 1 were all in alignment to go up. That's a major clue. Don't short it. When they're all in alignment to go in a certain direction, and this particular time was up, don't short it. It's a recipe for disaster. If you do, it's definitely got to be a scalp. You might scalp it for 50 bucks, scalp it for 100 bucks, but you're definitely not scalping it because you're going to get the big move because it's not there. And the market is telling you it's not there. So awareness. Awareness is important, paying attention to what the markets are telling you via your moving averages, via your wave count, via the Fibonacci resistance or support. So again, for tomorrow, we've kind of got our downside and our upside picture in mind. We have where we're going to be trading with the market, not against it. So we're going to be paying attention to what the market is doing and what the pattern is beginning to develop into. We've got our scenario. If we dip down, that we create a new below what we've seen thus far out of this move off of this afternoon's highs. And if it starts to move below, we've got the 30-minute 20 there. If I take it back up to the hourly chart, we're going to be paying attention to our moving averages. Right now, it's sitting pretty tight around the 8. The 8's turned lower, but it's hugging it. It's not going to move too far away from that. But immediately down, we've got the 20. If it breaks the 20, then it's got to break the 50. And that breaks the 50, and then it's got to break the 200. If it breaks the 200, it's going down. It should begin to react to that and have follow through. On the way up, it broke above and it had follow through, tons of follow through, because this was below 13,000. Okay, I'm going to leave it there. Next update will be on Wednesday. Oh, excuse me. Next update will be Tuesday. I'm a day ahead of myself. Everybody have a really good evening.